Hi, this is the GBPUSD H4 chart, and today it's 8th of May 2013 and the time is 6:54 GMT. This is the chart which I used on the signal I gave to my app's users, and our entry is shown here by the turquoise line, and our stop is shown here by the red line, and we see that the pairs move is on a downward correction, on a downward corrective wave. Now, what should we do, and why we put ourselves at a risky position by placing our stop here instead of even lower, as I had described on my signal. The rule for this system, which I describe also in my book for MACD and EMAs, because we are using the 5, 10, 15, 65 and 200 MACDs, EMAs here, sorry, and MACD. We had given the previous signal here when ideally we got an entry signal from the system after the bullish cross of the 3 EMAs. The price jumped above 65 EMA. At the same time, the 3 EMAs were reordered in proper bullish order. The MACD started, the histogram started becoming positive because it jumped over the zero line, and the signal line touched the histogram and was ready to start running upwards inside it. Those were the ideal entry conditions we gave to our users who are profiting even after this plunge of the pair. But I wanted to give a chance to our new users to enter again. I told them that it was risky to enter here, but I should insist on following the rule of the stop loss placement by all means. This rule is to put our stop as many pips below the 65 EMA, the white line, as the half of the range of the biggest candlestick among the 10 last. The biggest candlestick when we entered was this, and half its range we should put our stop somewhere here. Okay, we didn't because I wanted to help you minimize your risk exposure, but you should make this correction now. Why you should make this correction, although I'm against moving our stop losses, because this way many traders lose money. I insist on making this correction because if we look at the day one chart, we will see that we just had all our conditions met here. The histogram is positive, is bullish above the zero line. We had this curve because of this correction, but odds are the price will keep going upwards once the correction is done. If we had our stop somewhere here, it would be close to the 65 EMA of the daily chart. Now, I will use another system to look at this pair and to show you why I am a big believer of this bullish trend. So let's go to another chart I have created. I have put our entry point here, and we use the Ichimoku system. We see that on the H4 chart, price moves inside the Kumo, Uh, this this is going. This means that the price is going to find huge support. The Kumo zone represents equilibrium. And do you see that since the price started moving inside the Kumo, it started moving sideways with very small candlesticks. Now, the leading Kumo has a sharp edge, and it looks like it's going downwards and it's going to create a bearish Kumo, but we have to wait and see. We have a lot of bearish signals here because the Chiku span is below past price action, but because this signal is above the Kumo, it is weak. We had Tenkan-sen, the red line, and Kijun-sen, the blue line, bearish crossover, but because it is above the Kumo, it is weak. The picture on the H1 chart is bearish. We see a bearish leading Kumo. We see the price going sideways, the Chiku span below past price action. Kijun-sen above Tenkan-sen, we had a bearish crossover. Price crossed Kijun-sen, we had a price Kijun-sen bearish crossover. But there is this reversal here, which gives this spike here. We will see if it manages to create a new bullish Kumo. We will see on the H1 chart. We saw the H4 chart. Let's go to the daily chart. On the daily chart, here is what I saw and why I am insisting that the pair is on a bullish rally. Like all the big moves, price never goes straight up or straight down. There are corrections, there are waves. So after the bullish Kumo breakout, which we had when we gave our first signal to our users, now it's logical that these investors are cashing out some of their profits. They are closing some positions and they give this bearish sentiment. By closing their positions, they put sell orders. So the market sentiment turns into bearish. But is this the true market sentiment or this? The leading Kumo here, although it's turned a bit curvy, it is nothing I would worry about yet, because it's much possible to go sharp pointing upwards again. The distance between Senkou span A, the upper line, the upper border of the bullish Kumo, and Senkou span B, the line of the lower border, is big. So we should expect this correction to add at any time soon, and the price to resume its upward move. Now, let's go to the weekly chart. The weekly chart shows that although price is below the Kumo, we had horizontal Kumo here for a while, which means that price was in a range-bound territory. Although price is below Kumo, Chiku span is below past price action. We had a bearish crossover of Chinku, of Tenkan-sen and Kijun-sen. Look at this. This is the leading Kumo. The leading Kumo has a flat top and it is curved on the other side. We call it belly down. This is the belly, this is the flat top. A belly down Kumo is signaling possible reversal. This move here, which is huge because each candlestick represents a wick, reflects on this curvy formation here on the leading Kumo. What is going to happen if the reversal truly happens? Then this distance between this flat line and the Senku span A will get smaller and will give a birth to a new bullish Kumo, which will go upwards. So this is what I saw, and I believe that price will start resuming upwards pretty soon. And although currently it's moving like this on the H4 chart, if we go to the M15 chart, which is a chart, a smaller time frame where the new moves get born, when there is a major directional correction, we notice it first on this chart, and then it reflects to the bigger time frames. So here is the dip of the price, the plunge, and all this sideways movement for so long means that we should expect a breakout pretty soon. The leading Kumo gives us a small hint, a little hint that that breakout may be bullish. I believe it will be bullish, judging by the daily chart. I'm not a prophet, I'm just trying to use my common sense and the bigger market picture. So if we have placed our stop a bit lower, so it gives us a psychological break, and if we monitor for a while the trade from the M15 chart, we might observe this reversal taking place and the price going up again. If on the M15 chart we see that price turns down strongly, then we should rather let it go out before it hits our new lower stop. Then you should rather go out. But if things go as the daily chart shows, that might not be the case. I believe this is just a correction, and we should wait for the price to resume and start going upwards again. So thanks for watching, and I wish you success with this trade.